Hey traders, welcome to the monthly breakdown, monthly preview for September, what we're going to be expecting from the charts moving through September and into the fourth quarter. So starting with the dollar, as you can see, we've completed this nice little corrective structure and it looks like we want to head lower. When we zoom out onto the weekly, as you know, as we've spoken about many times, we are looking for more dollar weakness down the road. We've already touched on our minimums and passed through them. Our next level is going to be 90.53 and following that 87.17, which is our full target for this down move. So we're going to have to keep a close eye for a turn in the dollar heading into this month and the next quarter, as we suspect from there we're going to be heading much higher. Depending on what the story is, it could be inflationary driven, or it could be the story that the reflationary trade is not actually coming into existence as people have suspected, and we go into more of a deflationary environment, which leads to a much stronger dollar. A lot of economic weakness at the moment, especially in the US, and I feel that that economic weakness is going to spread throughout the world, and that global weakness is going to lead to dollar strength. So whichever way you look at it, it does look like we're heading towards a stronger dollar environment. We're just waiting for that to play out moving forward. Heading into, well, this is the more broad weighted dollar index, and as you can see, similar situation. Instead, in this case, we've passed through our middle or median target, and we are now heading towards our full target at 118. So it's getting very close to a turn in the dollar, and a lot of pairs are showing that we're heading towards this turn in the dollar sentiment and heading towards a stronger dollar environment. When we take a look at the euro, similar situation. As you can see, we've had a strong C wave and have basically reached our minimum target. However, when we go into the lower time frames, you'll see that we just completed a corrective move for more upside, which makes me feel like we still have some more upside to come. 120 should be surpassed, and we should move towards 123, potentially as high as 128. So we'll see how things play out moving forward, but I suspect in the beginning of this month we're going to see some more dollar weakness, some euro strength, and we'll have to see how things develop following that move. Pound dollar, we have seen our minimum targets met, but similar to the euro, we just completed a fairly large corrective structure, signifying that we should see, at the very least, a move encompassing this impulse. So minimum target 134, median target 135, 136, and full target 137. Zooming out, we'll see that those targets are very close to our median target of the dollar or pound dollar move. So give me a very close eye on this final leg up to 135 and look for a turn in the pound. It's all going to be relating to the dollar. Aussie dollar, US dollar, as you can see, zoomed out, we are still on just a pretty much straight line impulse to the upside. I'm not quite sure what's going to happen with the dollar moving forward. As you can see, there's really two scenarios that we're playing here. Are we playing this impulse up as a C wave and making it an extended wave, where all of this would be a corrective structure for more downside to come? Or are we playing this as a turn in the dollar to the upside and we're playing this move to the upside? As you can see, the bigger structure doesn't really make sense. I'm leaning more towards a turn to follow the dollar strength. I don't see how the Aussie dollar would survive US dollar strength. So I suspect we're going to start to see a turn in the Aussie dollar as well. We'll see the same on the New Zealand dollar. It's just a bit more of a clearer picture on the New Zealand dollar, where we zoom out and we find this impulse down, choppy corrective price action, and then we should see an impulse to the downside to follow this move. As you can see, where we're sitting is a little bit more upside. So going back to the Aussie, looking at the lower time frames, you see we've been looking for a corrective structure here. Initially, we were looking for all of this to be a corrective structure. As you know from previous webinars, we were looking for all of this to be a corrective structure, meaning we were looking for a move down to match this one, which we never actually got. So it's still possible that that comes down the line, but I'm starting to think all of these are just lower degree corrections for more upside, and all of this is just one big C wave with all of these small corrections. There's one there, there's one there, there's another one here, and we continue higher, heading towards that full target or extended target, really, on this ABC correction, looking at this as an ABC. So we're keeping an eye on this just to see how it plays out. It's not a very clear picture at the moment, so we'll have to see how things develop moving forward and what to expect from the Aussie. As obviously the Euro Oz is a little bit of a different story as well. So potentially we just continue to see Aussie strength, but it's a bit of a mixed bag given what the rest of the pictures are showing. Similar to New Zealand dollar, where we're seeing short-term New Zealand strength and then continued dollar strength after that. Same with the pound, short-term pound strength, but then dollar strength takes over. Same with the euro, short-term strength for the euro, but then the dollar strength takes over. Now we're looking for the same thing from the Aussie. It seems that the Aussie is going to go that way too. US dollar CAD, similar situation where almost inverted. We're now approaching our median target of 130, or I actually think that's our minimum target of this big structure, similar to the DXY. We've approached our minimum target and we're now going to be heading towards our median target at 1.26. So, but following that, we're expecting a continuation in dollar strength, wherever this comes from, whether it is from the median or the full target. So all of these pairs are pointing towards dollar strength moving forward. So it makes me feel like that is the scenario for the Aussie, but maybe not. When you look at the Euro Oz, you see something different. US dollar Swiss, as you can see, the higher time frames are a complete mess. Our best guess is this is the structure we're looking at, and we're in a B wave. So we're really going to take some time for this to play out and to get a clearer picture of where we're headed in the longer term. Shorter term, it looks to me like we are heading lower. It's a very similar picture to the Euro and the DXY, where we just completed this lower degree correction, and we want to head lower from here. Following this move, potentially we get this wave higher, and all of this becomes a large running flat for more downside. So impulse up, long, drawn out choppy correction, potentially another impulse up to match this one. And then from there, obviously because it's a running flat, we would head further down. But nothing to say on the bigger degree that this is the structure. As you can see, the higher degree pattern is just a mess. So we're only trading this from a lower degree perspective. So just keep that in mind when trading the Swiss. It's a bit of a mixed bag and should continue to be a mixed bag for the foreseeable future. Very similar to the US dollar yen, where the higher time frames are really messy and hard to distinguish. As you know, this is quite a clean A wave. If we're looking at this as an impulse down, nice impulse up for an A wave, and we remain in this choppy move lower. So I suspect what we're looking at here is of this bigger B wave, that is an A. We go into a kind of contracting running flat B, and all of this is chopping down C to the lows before we get this wave higher to complete this bigger structure. So I guess very similar to the other pairs, where for now we're expecting the yen to thrive in this environment, kind of like the euro, the pound. We're expecting that yen strength, and then only later we see the US dollar strength taking over. When we zoom in, however, we see that this picture is a complete mess with this whole move lower and then this whole move higher. It's very confusing, a very confusing picture. So what we would expect is potentially to see a wave that matches this one moving forward up towards this 111 and then continuation to the downside. But I just don't like that as a picture because it makes no sense given where we are. Looking at the MACD, you see we have a wave up to match this one, which would be this wave. And then the MACD also has this wave up, which would be this one. So taking a look at the Fibonacci, I very much doubt that this is the 0.618. It falls very short, which means it's a very weird picture given these numbers. So this is one I'm a bit confused about, and we need to stay on the sidelines for a while. Ideally, zooming out, what you want to see is just a continued chop or continued move down below these lows at 98. Then you know you can start looking for this long to match this wave up as a higher degree ABC correction, which we can make, let's say, blue of a higher degree. So we'll be keeping an eye on that for now, but on the shorter time frames, I don't really see anything worth trading that makes any sense really. So for now, I'm happy just to stay in an observation of what's occurring. Interesting to see US dollar China continue to weaken, which makes it difficult to pinpoint exactly what we're looking at here. I suspect that potentially what we're seeing is some sort of expanding triangle central B wave, something along these lines. And then we're going to see continuation to the upside following the dollar strength that we're expecting. As you can see, this is potentially the picture we're looking at moving forward. So it makes sense that we're going to see some dollar weakness for now and then a turnaround and the yuan start to rally along with all the other pairs. Silver, higher time frame, zooming out. As you know, this is the trade we're looking at. Impulse up, choppy corrected price action, another impulse up. The minimum price targets of this impulse are still a ways away at 37 around about. So there's not really a complete structure, so it's hard to say what exactly it is and where silver is going headed forward. All I know is that we've moved a long way without a decent correction, and it appears that perhaps we're getting that correction now. That being said, if that is the case and all of this is your first impulse, the correction needs some time to play out and could be the rest of the year. So I'm not a huge fan of trading silver at the moment in any direction, at least on the higher time frames. On the lower time frames, what we're looking at is an impulse down and what looks like choppy corrective price action, where all of this may be corrective of an A wave down, choppy corrective price action up, and then another B wave down. Only then, following all of this, would I look to get long silver in this area, depending how things play out. So for now, precious metals really on all time frames remain a buy or just remain a hold. Gold, similar situation. Zooming out all the way to the weeklies, you see what we have is a really large corrective structure that requires a move lower. That being said, what we've had is not much of a B wave. It's an impulse up, a nice decent correction, and then this parabolic move up to the highs at 260. So it's hard to say when we're going to see that pullback or if this really is a complete B wave. That being said, if we are expecting dollar strength moving forward, that should have a negative effect on gold in some respect, and we could see the C wave pull back moving forward. Potentially all of this starts to develop into a kind of triangle formation down the road, where we get a wave down, which we think is a C wave, and then we get another wave up, which becomes a D and an E wave, and then all of this just becomes a triangle of some form. So we'll see how things play out, and that's obviously going to take a long time to play out moving forward. That being said, it's difficult for me to be long or short gold in any long-term trades. Shorter term, I actually am short gold looking at this picture from here, where we have this impulse down. It looks to me like an A wave. We're now in the middle of a B wave, we should see a C wave and then a continuation down from there. So a bit of a complex correction at the moment on this lower degree. So keep an eye on that. I'd like to see this really start to play out as a short trade from here, where we have this as your A of B, then an expanding flat as a B or the central B wave, and then a move down as C of B to complete your B wave. And then from there, another rally higher. So I feel like we're going to be in this range for the foreseeable future, at least until kind of late September, later on in the month. So we'll see how this develops. Longer term, no real trades in it for me. Shorter term, some higher risk trades, but it's very early on in the structure. I'd like to see this move down to 1853. Then I would look to trade that to the upside as a C wave and then potentially get short that and trade this in all directions on the shorter time frames. Gold-silver ratio looks corrective for more downside. Obviously, this is the pattern we're trading, and we're looking to see further downside. Once we start to see this turn is when you're going to start to see dollar strength take hold, and this deflationary trade potentially, or whatever it's going to be, start to take hold. So keep an eye out on that. Copper continues to trade well to the upside. As you know, we're trading this as an ABC correction. We've had a nice strong surge in the C wave, and we have met our minimum targets on the C wave for this corrective structure. We are now approaching median and full targets, so we'll see how things play out. Obviously, this matches the entire picture, where what we see is early dollar weakness, and then all of a sudden we turn to see dollar strength moving forward. Palladium, similar situation, where we are in the middle of a correction that is taking its time to play out. We should see this move down towards 1480 and then continue in the sideways chop from there. So zooming in, you see we've had quite a clean structure to start with, which means it's going to be a choppy structure to end with. Clean A wave up, or clean impulse down, clean A wave up, and clean A of B in the middle. And now we've had this B wave structure. Now we're looking for this C wave, and it's going to be a choppier version of that, which is exactly what we're getting. So expect a break of this to the downside to match this wave, and then another move higher to match this wave, and then only then some meaningful downside. So I feel like we'll be in this range for a region, or this region for a while. So, but there will be some short trades later on in the month in Palladium. Platinum, zooming out, you see we remain firm on this higher degree structure. It looks really good and should continue to play out, which means we should see platinum catching up as a precious metal in comparison to copper and the rest of the gang. So if we were to trade precious metals moving forward, I suspect platinum would be the one. However, looking at the picture, it's an absolute mess on the lower time frames. Very difficult to trade. As you can see, getting rid of the fluff, what we've really had is an impulse up, corrective price action, impulse up, corrective price action, impulse up, but it's all been very choppy and very difficult to trade. We're now in a little bit of a correction again, so it's hard to say where we are moving forward. What I suspect is a bit of a running correction to form over the next few months. So it's very difficult to say how things are going to play out. Platinum doesn't really match the higher pictures like copper, like gold, like the rest of the majors in comparison to the dollar strength, because we would expect the dollar strength to occur from this 1036 region. Potentially there's a triangular formation in here which we've missed. We'll have to relook at it if we start to see that platinum weakness. But really on all time frames, it's difficult to find a trade. All we really know is that the high degree structure suggests we want to head higher towards 1,300 on this. I'm just not quite sure of the picture we're going to use to get there. Potentially this is just another lower degree correction, and we have a strong surge in platinum later in the month. So look out for that. If you see any entries to the long side in platinum, that's what you want to be looking for moving forward. Euro Oz looks to be playing out nicely for us. As you know, higher time frames. Zooming out, we see we're trading this structure, this impulse down, corrective move up, impulse down. Zooming in, you see what we have is this impulse down, which we've traded. And then we have this corrective structure, which has crossed its minimum line and looks to start moving lower. This is the correction, nice long drawn out flat pattern with all the right characteristics. And from there, we're starting to see this impulse lower. So I'm in this trade from 164. Really nice trade so far. It's always nice to see a trade start off with just a straight line down. And we want to start to see a little bit of a correction and continuation in the beginning of September. A little bit of a drawn out correction beginning of the month, and then continuation to the downside from there to see that move continue moving forward. Pretty similar situation for Euro New Zealand. We had this long impulse from the highs. Zooming out, you'll see it's the same structure. We have this impulse up, A wave down, choppy corrective price action. And you want to see the euro move down towards 164 from here, potentially as low as 154. As you can see, impulse down, nice corrective expanding flat, and a nice move off the highs. When you see the higher time frames, you'll see really nice impulsive price action. The only difference with the Euro New Zealand is that potentially we touched on the minimum, which you can see here, where this is your minimum price target, which means potentially what's occurring at the moment is an impulse up, and all of this is actually just a correction for more downside, so for more upside, sorry. So we're keeping an eye out for that as a potentiality for the Euro New Zealand, and potentially in the Euro Oz, we'd have to look at our picture again. But this is potentially the picture we're looking at as well. So just keep in mind, if you are short the Euro Oz, there was a nice entry at the top. Here, a nice little flag. If you are short, you want to be in break even. And hopefully what you'll see moving forward is just a nice running flat for continuation to the downside. But keep in mind that is that viewpoint where we could just be seeing this as the first impulse of the correction for more upside. So it's a bit 50-50. If you are in the trade, just keep that in mind moving forward. Eurocad, we are struggling to find the correct structure for this trade, given the choppiness of the move, but really they all point to more downside moving forward. Impulse up, A wave down, long choppy drawn out, B wave, and you're looking for this impulse down to complete this corrective structure before we continue to the upside. Zooming out, it also makes sense because we are trading this as our supplementary wave or complementary wave. So we're trading this to the upside, up towards 165, 170, 175. It's just going to be a choppier version, and that's exactly what we have, or what we've gotten so far. Nice impulse up, nice long drawn out correction now. So ideally, we want to trade this short to the 150 region and then get long following that. But it's been a challenge to trade because of the structure of this move down. We've got an impulse down, and we've gone into this kind of running, expanding triangle, or some kind of running formation, which is difficult to see. So we'll have to just see how things play out here. I still like the short to the downside, but it's difficult to see exactly how it's playing out. Potentially, the one scenario we're looking at is that's an impulse. This is an impulse now to the downside, and this is a lower degree correction for continuation to the downside. So I still like the short. It's just been challenging to find a short entry. If it continues to be this way and you can't find a good entry point, as in a nice flag on the hourly in this region now, you might have to just watch this continue to chop all the way down to this 150 region and look to get long rather towards the end of the month, because that's the really nice looking long trade given the length of this correction that's played out. Should have a really nice long trade from around about 150. So keep an eye on that one. Euro Swiss. Zooming out on the Euro Swiss, you find it's also an absolute mess. If you look at this all as a structure, it's hard to see what the structure is given the manner of the waves. This decoupling was really, or depegging was a real mess to trade. So we can only trade this on the lower time frames. And looking at the lower time frames, we're going to trade this as such, where we have this as the impulse down, and this is your A wave. Now we're in the B wave to the downside, or we have turned to the downside. So taking a look at this, there's quite a strong impulse off these lows. So that's what we're trading at the moment. We're only trading this on the lower time frames. Nice little wedge and an impulse off the lows, which looks like it goes into correction here. So we're trading this as an A wave, A, B, C, B wave, and a C wave down, which means on that structure we have impulse up. We are in some form of really messy central B wave correction, and we should see a little impulse to the upside, followed by an impulse to the downside. That's how I'm looking at it for now, but there's no real trade in it, given if you look at this correction, it's an absolute mess. I tried to look at this over the weekend. The best I could come up with is an expanding triangle in the middle of this expanding triangle B, and then this is a C to the downside. So what that means is if you're looking for a trade in this, I would be looking to get long up towards this 1095 region, which means I would need to see a very decent looking corrective structure, which potentially we have here. We have an impulse up. We have what looks like an expanding flat occurring as we speak. So in order to be comfortable trading this, I would have to put an entry order above these highs, and then they stop below these lows, potentially as low as these lows if you want to be more conservative. That being said, zooming out, you see that's not a bad risk reward trade to the upside. You're looking at about 4 to 1 on the lower risk, maybe 5 to 1 on the lower or higher risk trade with a narrower stop. So it's worth looking at if we start to see a turn on the lower degree time frame, and we start to see this as an expanding triangle, then you'd want to start to see some movement higher from there. So keep an eye on the Euro Swiss. Although the higher time frame is a mess, and we just came out of a very messy structure, potentially what we're looking at is actually quite a clean structure to follow this. Because it started very messy, it could end very cleanly, and some very clean trades in there. So keep an eye on the Euro Swiss. Euro pound, zooming out, we have this impulse up, choppy corrective price action, impulse up. But as you see, zooming in, that this impulse up was followed by an impulse down straight away. So I suspect this impulse down is an A wave, and we are now in the middle of a very choppy corrective structure. So it's very inconclusive to say where we are in this. These arrows are my best guess of where we headed, but we need some time to let this play out and see if the structure is anywhere near what we suspect it to be at the moment. So let's give it some time, see how things play out with the Euro pound. Euro yen, I still really like this trade. Zooming out, you see it's a much cleaner structure. We have this impulse up, impulse down, impulse up. I suspect all of this is your B wave. And now we are breaking up towards this B before continuation to the downside of this wave. Excuse me, this wave. So this is what I'm suspecting we're looking at. This is all just one large correction for this impulse. So it's impulse down. This is an A. This is an A of B. This is an A of B of B. It's all very complex structural price patterns. But zooming in, it becomes much clearer that what we're looking at is a very nice impulse up, quite a strong impulse down. And as you know, we've been looking for this B wave to complete and to see this kind of impulse to the downside. And we keep failing to see that. And potentially that is what we're seeing now. Just want to see if potentially this was enough. No, so none of these waves down have done enough for all of this to become a nice running flat for us. So that's what are we going to be looking for. We're looking for this to become a nice running flat, and then to trade this to the upside. And zooming out, you'll see exactly why we want to trade this to the upside, because it is the C wave of this corrective structure. So we want to trade this up towards the highs at 140 euro yen, and then we'll switch that around to the downside. So definitely a trade to look for to the upside. Short trade, it's been difficult to look for. I think we need to skip this short trade and look for the longer trade, the longer impulse up, and trade that as a long from 122 up to 140. Could be a really nice trade. So definitely going to put that on our list. Pound Oz remains in view as this structure impulse down, slow moving impulse to the upside to start the wave, and then we go into this expanding triangle. We should see this impulse to the upside. As you know, this is your impulse up, and I think all of this is just correction before we see another impulse up to follow. So zooming in, you see what we're trading now is the C wave of the B wave after this expanding triangle, and we're looking for an entry. Zooming in, you see we have a really nice impulse off the lows, which is really great, and we go into this corrective structure, which is really challenging to see what exactly it is as we speak. What it looks like to me is that this is your A wave. Just get rid of some of these lines to make things a bit more clear. I think this is your A wave. We then go into an A, B, C, D, E expanding triangle, and now we're in the C wave. So all of this is an A, B, C with an expanding triangle in the middle. So we want to wait for this wave to end pretty imminently, and then trade the pound to the long side, pound versus the Oz. So we're looking for a turnaround. Potentially we've seen that already, given that we've seen quite a decent impulse off these lows. So an entry order above these highs to me is not such a bad idea with a stop loss below the lows, because one of two things is going to happen from here, and it looks like it is happening, where strong impulse down breaks these lows, and then we wait for a new turn, a new structure that looks like this before we put our entry order in again on top of that. Or what we're seeing is the end of a little bit of a corrective structure now, the C wave of that structure, and then continuation to the upside. So entry order above these highs, keep it in there until we break these lows with a stop loss below these lows. If we break these lows, you take the entry order off and wait for another structure that looks like this, where you have an impulse off the lows and your first correction to get into the long side. Pound New Zealand is a little or higher time frame, very similar. We have this impulse down, impulse up, choppy corrective price action, impulse up, impulse down. That's what I suspect we are looking at. So all of this is just a corrective move for continuation to the downside. And if we zoom in, we have a similar situation where we've had a really nice impulse off the lows. And as you know, we were trading this or these expanding triangles, which is lower degree price patterns. And only now are we seeing the first move to the downside, which I think is going to end up being an A wave. So all of this is going to be your impulse up, and we should start to see this turn around and chop back up towards the highs. So very similar to Pound Oz, just in different phases of their correction. And then we would see a similar move to the downside, and then continuation impulse to the upside. So changing the color, you'll see all of this potentially is going to turn into a running flat for more upside. So maybe no trades until the end of the month, unless you really want to get into this long as well. But if you are looking for this long, I'd rather take the Pound Oz as a long, because it's already completed its higher degree structure, or its higher degree correction. When you see this as the big impulse, we've already completed a long drawn out correction and look ready to head higher. Whereas in the pound New Zealand, you're only trading the start of a B wave to the upside. So I'd look to get long the Oz rather than the New Zealand. Pound CAD has also been very difficult to trade. Zooming out, it's very tough to see exactly what we're trading. In its simplest form, we're trading this as an impulse up, A wave, this as a B wave. As you can see, the complexity, impulse, correction, impulse, and all of the complexity occurs in the middle here, which means all of this is potentially just part of a move higher. And if that is the case, have we seen enough? Because we have touched on our minimums, even close to our medians on this, and potentially seen a turn. So it's difficult to say where we are. All we know is we have an impulse down, we're in a correction, and we want to see an impulse down. Zooming in, to treat this as a C wave, you would have to see this as all a C wave, and then because you've seen the strong impulse down, that is the start of the move lower. And if that is the case, is this all enough to say this is your first correction and we should see this continue to the downside? It's really hard to say exactly where we're at and how to trade. So I don't really like the pound CAD at the moment. I'd much rather trade the Eurocad. As you can see, the lower time frames, you've got a fairly decent impulse down and a little bit of a strange corrective structure. Potentially all of this is just going to be an expanding triangle later on, where we have an A, a B, a C, a D, a little E wave, and then continuation to the downside from there. So let's see how things play out. That's my best guess for now, but nothing clear for pound CAD. Pound Swiss looks like it wants to head higher. This is one of those pictures on the higher time frame, which makes way more sense than the lower time frame, where we have this impulse down and we go into an A, B, C correction. Quite a nice correction, long drawn out choppy A wave, nice B wave with an impulse down, expanding triangle, another impulse down. Then we've had a strong impulse off the lows and then gone into a very messy corrective structure. So really two ways of looking at this, which makes it difficult to trade. Are we seeing this as an impulse, corrective triangle, correction, and then all of this is your impulse higher? Or is all of this one impulse, although it is segmented A, B, C, and now we're in a corrective structure itself, and we're in the B wave of a corrective structure? If that's the case, we have an A wave, we're chopping up as a B wave, and we should still see a C wave move down before we see another move higher. Up towards our higher time frame target. So we'll have to keep an eye on this. Being long CAD Swiss at the moment works for me, but at the same time, we need to be very careful that we don't get up to this region and then just see a strong turn to the downside because trading this A, B, C correction for more upside. So just be wary of this one. It's a very strange picture, but we need to keep an eye on it. And if it does play out in this fashion, obviously there's a nice short trade to the downside and an even better long to follow, because the move up from this should be very quick and a very strong impulse. So we'll be keeping an eye on that. And the pound yen is a very similar situation, where we have this move higher, although it's very choppy, and it looks like we've gone into a bit of a corrective structure where all of this is going to end up being a running flat for continuation to the upside to match this impulse. So we'll have to see how things play out. The higher time frames, very similar to pound Swiss. Impulse down, and we're in this long drawn out correction for eventual continuation to the downside in the pound to match this wave. So keep an eye on that. see how things develop in the beginning of the month. Obviously, if we do get the C wave to the downside, it will be a nice trade if you can find an entry, but I'm more interested in the long trade towards the end of the month. Aussie Dollar Cad just remains a mess on the higher time frames. Not my favorite pair. We look for trades on the lower time frame in this, and as you can see, we just had a strong impulse directly off the lows. Zooming in, we'd look to this to develop into more of a corrective structure over time to see this turn into a nice correction of a decent size to justify this whole impulse. Otherwise, there's not really much in it for me in terms of trades. Aussie dollar yen, bit of a mixed bag, hard to say what we're looking at. Zooming out, imagine we're trading this impulse down, or it seems all of this is just an impulse to the upside. I'd have to imagine that what we're looking at is an impulse A, B, C is complete, and we're now trading this as an impulse, or this is your A wave, all of this is your B wave, and you're having a C wave to the upside. It all looks impulsive to the upside. That's all that really matters here. So then going down into the lower time frames means we're looking for long trades. We have quite a decent impulse and a long drawn out correction. I would like to see this pull back towards 72, but keep in mind that this is potentially a running triangle for continuation to the upside. A, B, C, D, E, and now we are in this impulse to the upside from here, given this move higher from where we are. If that is the case, this is a trade you want to look for. You want to look for this to develop into a decent correction, and then trade this to the long side. And I'll show you an example on the S&P as to why you would want to trade this, because if this is a running triangle correction preceding this, this is your first correction following the running triangle. Just to zoom out and show you, you've had your correction as if this was a running flat. This is your first correction following the higher degree correction, which means you want to trade this to the upside if it does play out this way. Running triangles are difficult to trade because there's nothing to say this isn't just a running flat that isn't completed, and we still see this move lower. But if it is a running triangle, it will get legs and it will take off quite quickly. Example being the S&P. If the S&P was a running triangle that we were looking at, where this is an A, B, C, D, E correction, this was your first corrective structure following that correction, and we've had a strong impulse to preceding that. So keep an eye on the Aussie yen to give you a little bit of a flat pattern here, correction, where this would be your lower degree preceding impulse. So ideally you would want to see it play out for kind of the beginning of this week and towards the end of this week, or anything that looks like a corrective structure, regardless of the time aspect, you would want to get long. So watch for this to get choppy and then pull back towards 77, 77.40, somewhere there, and get long the Aussie dollar yen. New Zealand dollar yen, similar situation, except this did complete as a lower degree correction. As you can see, we're trading this to the upside, and where the Aussie dollar yen was a triangle, this became a triangle. This, as a New Zealand dollar yen, actually played out as quite a nice corrective structure or flat pattern. A wave down, impulse correction, impulse B wave, impulse correction, impulse C wave, and now we've taken off from there to the upside. That makes me think the Aussie dollar yen is a great trade, because you should start to see a move that looks a lot like this following that corrective structure. So this was a great trade. If you are in it, impulse up, choppy corrective price action, impulse up, minimum target is going to be just trading the lower degree structure. Minimum target is 73.80 and full target around about 77. So keep an eye on that one. Zooming out on New Zealand yen, you'll see it looks like we're just trading this running flat. So there'll be a nice trade to the downside following this move higher, maybe at the end of this month or beginning of next month. Keep an eye on this one as a really nice trade. Aussie dollar Swiss is, actually need to swap, Aussie dollar Swiss, similar to the Aussie dollar yen. We're trading this as an impulse and a correction. So what are we looking at here? Was this also a running triangle for continuation to the upside? It's breaking up to the upside. Or is all of this just a long drawn out corrective structure? If you see anything that resembles an entry, I would take it to the long side because of the potential risk reward available to you. Some serious risk reward available to the long side if you can find a long entry. So back to the hourlies, looking at potential long entries. Ideally, that would have been your entry. It would have been ideal, and you would be sitting in break even now, waiting to see how things play out. Obviously, that's not. If that's not the case, we're looking for another entry, which means you'd want to see this develop into a running flat structure to trade this to the upside, and a fairly decent size structure. So remainder of the week, you'd want Aussie dollar Swiss to be in correction and look to get long later in the week. Aus New Zealand, zooming out, as you know, we are trading this little ABC corrective structure. We're looking to trade this to the upside as a C wave. Zooming in, we find we've had a nice impulse, lower degree correction. I was hoping this was going to turn into a bit more of a running flat, and potentially still does, but it looks very impulsive. So I suspect what we're seeing here is just an impulse up, a little bit of a lower degree correction. As you can see, it's impulse down, impulse up, nice little B wave. You should see this chop higher to match this wave, and then chop lower to match this wave. All of that's going to be a kind of flat structure for one more upside moving forward. That's what I'm looking at the moment. So the long trade following this is decent, but at the same time, remember, this is not going to be a correction of this magnitude. It's a lower degree correction, or appears to be a lower degree correction. I mean, this would be your upside target, 111. It's not trading this one to the upside. So you're looking for longs, but the upside reward is slowly diminishing as we approach our full target on the Aussie dollar, New Zealand dollar. Swiss yen still remains in consolidation, and I still see this as the current picture. I'm still looking for my short entry, but it's being ever elusive. Obviously, any break of this high negates this picture, because it negates the A wave. I still think what we have here is an impulse down, ABC, and we should see another impulse down to follow. But perhaps I've got this all mixed up, and what you're actually looking at potentially is an A wave, an A, B, C, D, E expanding, and now you're getting that impulse up. Either way, if that is the case, we're still looking for this to the downside. If that is the case, and that is all the correction, it means you're trading this one to the downside, which makes sense too. So we're looking for this short Swiss yen trade, just looking for entry because the payoff is going to be huge. We thought we had it at the highs recently, where we saw a really nice pullback, and I thought we were just going to go into a correction for continuation to the downside. But as you can see, it just continued to chop up and break the highs. So not quite sure what we're looking at. Potentially, this is all just another C wave correction for continuation to the upside to go break these highs once more. So that's what I'm looking at for now. Wait for this to break the highs and then look for a sell setup. That being said, if this starts to develop a sell setup here, this looks like it's going to be an A wave, get a bit of a choppy move down here, and then another C wave. I will definitely take that trade to the downside, because it means potentially that all of this was just a complex or a contracting flat. This was your final wave up, and this impulse down is your first one. Because if we go to the hourly, it's quite a strong impulse down. So if this starts to develop into corrective price action, I want to trade that as a short trade. Oil continues to chop higher. I'm going to go to UK oil. It's a much cleaner picture. I suspect we're still in correction here, unless, again, this just turned into a triangle A, B, C, D, E, and we're heading higher. I don't like that as the structure. I think all of this is still correction, and we are just in this wave, a choppier version of this wave. So it's impulse, correction, impulse. I suspect we're going to push up towards kind of 46 to 48. If we look at the target of this wave, look for areas that match. It looks like up towards 48 potentially is your target, and then only then we will see our final wave to the downside, which is this one, which we shall make yellow, and then all of that becomes this big, long, drawn out, running flat. And then you want to get long oil from around about 42 to the upside. So just keep an eye on that, see how it develops. Obviously, all of this could be a triangle, and we're heading higher from here, in which case I would need to find a decent long trade. If you got into this as a long, there was a nice little long trade, break and retest of this trend line, impulse to the upside. If it runs away from us, that would have been your entry. If you feel confident that that is what we were looking at, then you will have to look for long entries from there. But I think it's dangerous. I'd have to see a move up to here and a corrective structure before getting long with any conviction. So what I'm saying is that all of this potentially was just a triangle. A, B, C, D, E, impulse correction, and then we're going to take off from there. Potentially that's the case. But for now, I remain in the camp that this is all an expanding, complex, running flat. We will get a pullback down to 42, and that's the long you want to take. Zooming out to the weeklies, you'll see that why it's such a good trade. Impulse, correction, impulse, up. Best viewed on the daily. Impulse, correction, impulse. Trading this to the long side. So keep an eye on that as a great long heading into the middle to end of this month. S&P, for now, looking at this as a running triangle and just continuation to the upside. If that is the case, it's hard to justify that this was a correction enough to be of the right size for this impulse. I still think potentially we can get a pullback and all of this becomes a running flat, and then we get our move higher. That makes more sense to me, because if this is just a little triangle, we are only trading the smaller impulse preceding it, which is this one. And if that is the case, we are approaching an area where we're going to have a long drawn out correction. Potentially that is the right move, because we're going to have a long drawn out correction heading into the election. So it's an impulse up, A, B, C, D, E. And this is your next impulse. We're already at the minimums, and 3.6 to 3.7 is our full target. So let's see how things play out. I'm not a huge fan of this chart. We'll have to wait for clarification as to exactly what we're looking at. Potentially it's an impulse A, B, C, D, E in the middle somewhere, and we still get this A wave to the downside, still get this wave, and all of this becomes a larger degree running flat for more upside. So we have to wait and see. NDX just straight line up, no correction whatsoever, not even on the 8 hour, not even on the 4 hour. So all of this is one impulse. keep in mind, on the 4-hour chart. So being long this at any point is just reckless, really. If you do want to trade this, you would have to just trade these little corrections and then move your stop to break even as quickly as possible and hold on to it like a raging bull, hoping you don't get flung off. The Dow is a very similar picture to the S&P, but it's much cleaner. I don't see a running triangle in here. It just points out that it wants to pull back to give us a nice drawn out correction of this magnitude. So it's just crossed its minimum line, where all of that now becomes your impulse. Nice running correction, and then we get a nice impulse up. So keep an eye on this one to maybe start to reflect on what the S&P is actually doing. And that's why I think we might still get this impulse down. It's just taken a lot longer to play out than we suspected. And the Russell, similar situation, also a mighty mess, but has that potential to pull back. If you look at all of this as your impulse, long drawn out running flat, that's taken long enough to be a running flat of the higher degree, push back down to 1.4, and then a big push higher from there heading into the election. So let's see how things play out over the course of this month. We'll get clarity. We'll definitely have clarity by the end of this month. DAX, similar situation. Potentially all of this is turning into a running triangle for continuation to the upside. We just haven't had the follow through. And as you can see, if we all want to trading this as a long, you want to trade this as one long drawn out correction. Higher time frames, a little bit of a mess to justify exactly what we're looking at here. If we zoom all the way out, you'll see impulse up, A, B, C, D, E triangle. Impulse up. And really, if that is the case, and we are going to continue to new highs, you have to look at all of this as a correction. And this is your impulse. So we are now trading this as an impulse, going into some form of correction. Hopefully the correction ends cleanly, so you can trade the DAX to the upside with some conviction of a decent run. But for now, I remain muted as to where we're headed in the long term. I need to see this develop into a definitive corrective structure that matches this length before trading this to the upside. So I need to see one last pullback so I can clarify this as A, B, C, D, potentially an E wave as a running triangle. This flat pattern, if this is the flat, is not long enough to justify trading as this impulse to the upside. So let's see how things play out. If you get a decent pullback down to here, potentially to this trend line, then we can start to look at this as a long drawn out triangle for a trade to the upside. Very similar story on the Euro stocks, looking for that same picture. The Aussie, similar story. We're looking for all of this to be a correction for more upside on US equities. Continuation to the upside. Nikkei, pretty similar situation. We just need this correction to play out a little bit longer than it has. I would like to see one last pullback before we can call this a complete correction. Pounds are taking its time to play out. I think we're going to chop down towards 2050 for all of this to be in a choppy range for a while. Chop down, impulse up, C wave, and impulse down, higher degree C wave. So I feel like we're going to be here for a while. Pounds are, there's not much in it for me. Euros are much cleaner. We've had this impulse up, A wave down, B wave up. We're now in the C wave down to 1850. You want to trade this down if you can. We should be in this trade already. There was a really nice entry, which I spoke about up here. Another one here. We're looking for this to be corrective, but doesn't look very corrective, potentially an expanding triangle. Potentially too late to get into the short, but you want to look to get into the long following this wave lower, because that's a great trade to the upside. Euro ZAR, because you are trading this as your impulse. So we'll be looking to trade this to the upside following the completion of this correction. As you can see, zooming out, we're also trading this impulse, because the correction here, this ABCD triangle, is now this impulse up. So essentially we'll be trading the second phase of the higher degree impulse once this correction is complete. So getting long Euro ZAR probably only in October is a nice looking trade. For now, if you can find any short entries with good risk reward on the hourly chart, then that's what you want to trade. US dollars are similar situation. We are trading all the way out to the weeklies. We are trading the C wave of this running flat, where this is your first impulse. All of this is a correction. And we're trading this down to minimum 1580, full target 1360, somewhere around there. Zooming in, you see what we have is impulse down, ABCD triangle, impulse down, expanding flat. We are now in another impulse down, with this being your complementary impulse. So downside targets for this lower degree structure are 1590, 1540, keeping in mind that our area that we're looking for, 1580 as a minimum target, is close, and we are also trading this. Keep in mind the dollar strength to come, dollar weakness to start, dollar strength to follow. So keep that front and center trading this. I don't think there's any short trades left in this. We've come a long way down, but what you're really looking for is the turn potentially in this 1580 region. It might go and carry on, maybe just get another lower degree correction and push lower towards 1455, full target 1355. But really, you're going to start looking for the turn and a long trade to the upside, trading this structure to the upside now. So we're looking for this impulse to the upside to trade long once we see the turn. So personally, I'm short. I'm holding on to this short until we start to see a dying in momentum. I'll take that off and I'll look to get long US dollar ZAR. US dollar Singapore dollar, similar situation. As you know, we're trading this impulse up, long drawn out corrective structure with downside targets. We've crossed the minimums. We're heading towards the median at 134 and the full target at 130. So just keep an eye on a turn in the Singapore dollar as well, US dollar Singapore dollar. So it looks like a lot of the emerging market pairs are approaching the end of their strength and should really start to find a turn and a long US dollar trade on the EM markets. US dollar Mexican, same situation. We zoom out, you'll see A wave down, long choppy move up. B wave, we are trading the C wave down. We've already crossed the minimums. We're actually approaching the full target on the dollar Mexican peso. Zooming in, you can find that what we had was a little lower degree corrective structure. Trade this as a triangle. So this is your impulse. This is your correction. The lower degree targets for this, the minimum one at 21 is the minimum target or the full target on the C wave. So keep an eye for a turn in this one very early on in this month or towards the end of this month. We'll see a turn, and then you want to get long this as well for continuation trade to the upside. Zooming out to the daily or weekly, you'll see we're trading this structure as an impulse, running flat, impulse to the upside, being this one. So keep an eye on getting long the Mexican. Basically all EM currencies against the dollar look like they want to start hurting, seeing that EM weakness moving forward. So getting very close. Brazil, pretty much the same picture. Turkey is already gone. I think we're in a lower degree correction for continuation to the upside. And finally, crypto markets. Crypto markets, keep in mind where we're at on the higher degree structure. Impulse up, we're now in this correction. Impulse down, I think we're in the B wave. Impulse up A, choppy down B, impulse up C, which is the end of the B wave, and then the C wave of the higher degree structure to complete, which means I think we're going to see a strong rally in Bitcoin over the next few days / weeks, beginning of this month. I think the structure is just completed, and then we can really start to see this take off. So I want to get long Bitcoin basically as we speak. You want to be long Bitcoin. We just completed a decent structure, impulse, choppy corrective structure. We're now impulsing up again, potentially a little bit of a running correction formed here. And what that means is you really want to start to be long Bitcoin if you see any turnaround in price, and we should see this rally up towards 14,000. Really nice looking trade on the lower degree time frames if you look at the corrective structures. So take a look at Bitcoin, Ethereum, pretty much the same situation. When we zoom out, you find we just completed what looks like an expanding triangle correction, and we've surged higher. Really nice looking trade, really nice impulse off the lows, and just looks like it wants to head higher. And same with XRP USD, long drawn out corrective structure, A, B, C, D, E, impulse off those lows from around about 26-25 cents area, and we should head up from here towards 45, maybe even higher. Zooming out, the corrective structure is as a C wave for more downside to come. So all of these pairs are trading as they C of B, and we should still see one last move lower in crypto as the dollar strength comes in, as the speculative nature of crypto takes hold once again, and people sell it off, going into more defensive plays. But Ethereum's a bit different because the structure is very unclear, as you can see, but A, B, C for more downside definitely works. Bitcoin, still feel like we're going to push higher and then see one more pull back in Bitcoin from wherever it ends as a C wave before the real move higher starts. So keep an eye on this moving forward. And that's it, guys. That's it for the monthly preview. Some really good looking trades. Like we said, what we're looking at is early stage dollar weakness and a turn in the dollar, perhaps in this month or maybe only next month. So initially we're looking at dollar weakness in all of these pairs and waiting for a turn in the dollar. Precious metals are really nowhere for me. I'd only really look at silver to trade the waves up and down in silver. I mean, not silver, as in gold. Trading these lower degree trades up and down as this corrective structure kind of takes hold. It's got a nice clean structure to it. So just be wary that the next waves are going to be quite messy. Copper continues with its dollar weakness initially, moving into dollar strength, as in copper strength to start with, and then copper weakness moving forward. We've passed our minimum targets, we're approaching our medium targets, potentially getting up to full targets. Looking for a turn in copper. Palladium remains a mess. Just trading palladium as best we can, the messy waves. I would wait for a pullback and a retest of this trend line. If you get that, a short trade in palladium would work out really nicely. Platinum, is a mess. Really just don't like it. I just feel like it is going to head higher. I can't tell you the structure of it though, it's such a mess. Euro Oz, I like continuation to the downside. I think we've reached the end of our correction like we've been looking for. We are finally heading down after months and months of messiness. So I really like Euro Oz short if you can find a correction, and Euro New Zealand short if you can find a correction. Just be wary of a turn in price there. I like Eurocad short if you can find the trade. It's been a mess. I like Eurocad long at the end of the month or middle of the month moving forward. Euro Swiss, I like a long trade here short term because it's been such a mess to start with. Like I said, messy structures usually end nice and clean. So a long trade following this little corrective structure. As you can see, we've gotten some nice candles for a shot to the upside. I like this trade long, and then I like the short to follow. All of this being correction for this impulse. So I actually have to change this color. All of that is your impulse to the downside. I like it up, I like it down, and I like it up following that. So nice waves moving forward. Pound, Euro Pound remains a mess. We're just figuring out as best we can what is happening here. But so far, nothing clean and clear. Euro Yen, if we can get this pullback towards 122, it's a really nice trade to the upside long to follow, as it is all just a running flat for upside push towards 140 potentially. So I like that trade moving forward. Pound Oz, I like to the long side, which we've discussed many times. Pound New Zealand, I think, is going to be in correction sideways. We'll keep an eye on it. Potentially there's an entry, but I like the Pound Oz as preference. Pound CAD remains a mess, staying away from that for now. Pound Swiss, I still like it to the upside. Potential surprise pullback to the downside though, so keep an eye on that. Pound Yen, same story as the Pound Swiss. Aussie CAD remains a mess, not even going to go there. Aussie Yen, potentially a really nice trade following this potential triangle structure. If we see this play out as a correction over the next few days, and I mean this little flat pattern on the hourly over the next few days, a long trade to follow that will be a great trade moving forward, because it is the completion and it is your first lower degree correction for more upside. New Zealand dollar yen is already off and running. Great looking trade to the upside if you can find a decent correction to enter on. Potentially all of this gives you that corrective structure you're looking for to get long on the hourly for a trade up. Just be careful, we are much closer to full targets on Aussie yen or New Zealand yen than we are on the Aussie yen. Aussie Swiss, same as Aussie yen. Keep an eye on that for a long trade if you can find a decent lower degree correction. Aus New Zealand remains a bit of a mess. We'll need to see some corrective structure. There's nothing really in it for me unless we can see this correction structure play out down towards 108, and there might be one more decent long to the upside. Swiss yen, still looking for that turn, still being patient, waiting for that short entry, waiting, just looking for those short corrective structures to get short, the short entry patterns. Always keeping an eye on that given the risk reward available to us. Oil, waiting to see how this plays out moving forward. Potentially another move lower before one last move higher, and all of that will be part of this wave for this higher degree correction. Obviously a chance, all of this is a triangle. There are lots of triangles in the market at the moment. I like this as UK oil, it's much cleaner. S&P, it's a mess. I'll only really trade this if I can see this long, then I will get long following that move, because that's a great looking long for a long trade to the upside, going up towards a 4,000 target, which would be an incredible trade. So keep an eye out for a long, strong pullback. And we will be looking at US 3000 or the Dow, because it is such a clean structure to follow the S&P. Russell, same story, just a messier version. And DAX, also looking for this correction to complete itself as a kind of running flat and or triangle before getting long, very similar to the S&P. Aussie, same story, and Nikkei, same story really. And obviously the US dollar ZAR, Euro ZAR trades, or the EM trades, are really good looking trades. I'm going to keep them on the list because there's some really good long opportunities. Bitcoin long, Ethereum long, XRP long as we speak are great looking trades in my view. So yeah, this looks like the month or the final push in the dollar, and once that dollar push is complete, dollar weakness, final push in dollar weakness, then we're going to start to see that dollar strength coming in moving forward. So keep an eye on that throughout this month. Otherwise, have a great month, and we'll see you in Traders Corner for some ideas on the short term. Have a great week, everyone. Chat on Thursday.